This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Pashurdias. Thanks for joining us at XM.com. Speculation that the major economies in Europe and America are on the verge of tipping into a recession continues to intensify as the flash PMI reports for June have provided fresh evidence that growth is stalling. The Eurozone's composite PMI is at the lowest since February 2021. Business activity in the US was the weakest since January, with new orders registering their first drop in 2 years, according to S&P Global. The UK's composite gauge held unexpectedly steady in June, but underneath the hood, the details weren't very encouraging. Although it's not yet set in stone that a recession is unavoidable, all the doom and gloom has taken the shine off the aggressive tightening expectations that market participants had priced in for the major central banks. Investors have switched from scaling up their rate hike bets to downgrading their predictions of the terminal rates. Measures of inflation expectations in the US and Europe have also subsequently fallen. But it's not just the deteriorating demand picture that's leading the decline in price expectations. Commodity prices have tumbled in June, and the drop has been pretty broad-based, so it's not solely been about oil's pullback. Other raw material prices have also pared back all or most of their post-Ukraine war gains. As unnerving as the threat of recession is for investors, there is cause for optimism as long as the rising risks are accompanied with declining rate hike expectations. Hence, stocks have been able to make some headway this week. The S&P 500 has recovered about 3.5% as of Thursday, and its E-mini futures were last indicating a further 0.6% gain today. Shares in Europe haven't been able to stage much of a rebound amid the higher risk of a severe downturn on the continent and in the UK. The brighter tone helped bond yields to steady on Friday. Fed Chair Jerome Powell reiterating his unconditional commitment to getting inflation down on his second day of testimony before Congress yesterday likely put a floor under yields too. Despite that, the US dollar was struggling today, slipping against all of its major peers. The dollar index has been forming a pennant over the past week, and a breakout looks imminent, though the direction is less clear. This is today's Daily Market Comment. Thanks for joining us at XM.com.